And so I think a Bitcoin maximalist is saying, Bitcoin is money. It's the best money. We believe there should be one money. So a technology is a market good in the economy that you consume. I think a Bitcoiner's position is this is money, good money that I can put under the mattress and it'll be worth more tomorrow than it is today because it's hard. It cannot be debased. And all of our contributions to the economy and to the world are going to produce goods and services that actually decline in price against this hard asset. Money is the market good in the economy that you buy not to consume. You buy to exchange later or to save. So I take my time and energy, I mow lawns, I run a podcast, I run companies, I make burgers, and I take that time and energy and I exchange it for money, and then I either save that money or I exchange that money later. That's very different than a market good in the economy that is a cheeseburger, because I don't buy the cheeseburger to save it or to exchange it for something later. I buy it to consume it. Okay. Money tends to concentrate. A natural market wants one money, right? We don't want all of our time and energy being priced in various different goods and services. The point of a money is so that we can all understand and how to value our collective time and energy and price the goods and services that we have in the economy. So I think what a Bitcoin maximalist believes is that Bitcoin is the best money. It's the best tool and technology to solve that particular problem. Well, then what is Ethereum? What is Solana? What is Dogecoin? I make the argument that they're technologies. Ethereum very clearly made that point with the DAO hack. Ethereum had developers get hacked. They could have said the monetary policy is the monetary policy, code is law, all that shit that they were saying back in the day. They didn't. They changed it. Why did they do that? They wanted to appeal to the developers, to the growth, to the decentralized computer for the world.
In this video, we feature an interview with Jack Mallers, conducted by Anthony Pompliano. Pompliano, a renowned Bitcoin and crypto investor and YouTuber. Jack provides a critical comparison between Bitcoin and other cryptocurrencies, like Ethereum and Solana. He argues that Bitcoin serves as sound money, being completely decentralized, while Ethereum and Solana are better seen as technology platforms with evolving rules. Jack contends that these differences make Ethereum fundamentally incomparable to Bitcoin. As we bring you clips from the podcast, take a moment to like the video, subscribe to the channel, and turn on post notifications for more video like this. You can join the conversation by dropping your thoughts, comments, and observations in the comment section below. Everything you do helps with YouTube algorithm and immensely contributes to the channel growth. Thank you and enjoy the video.
So a technology is a market good in the economy that you consume. When I using Facebook, I'm consuming Facebook. I'm not using Facebook as money. Real estate, whatever you said, art, fine art. I'm consuming the art. It goes on my wall. So I just don't find them directly competitive at all. And so I think a Bitcoin maximalist is saying, Bitcoin is money. It's the best money. We believe there should be one money. All these other things aren't money. Now, do I have a problem with technologies and securities? No. In fact, I'm the founder of Strike. I own a lot of a valuable security and we build technology. So of course I'm not against that. What I'm against, or what bothers me, is the intentional conflation. Ethereum was founded to be the better Bitcoin, and it often rides the coattails of Bitcoin, and it often conflates itself with Bitcoin's story and a lot of these things. It's the faster Bitcoin, the nimbler Bitcoin, the lighter Bitcoin. I call these things an arbitrage on the trend. So an arbitrage trade, can the camera see this? This is a spindrift sparkling water. An arbitrage trade would be the one in my left hand is $1, the one in my right hand is $10. I can buy the one in my left all day at $1, sell on my right at 10, and I'm netting 9 all day. That's an arbitrage. That's not a business. That's not a movement. That's not innovation. That's a trade. I consider these things an arbitrage on the trend. What's the trend? You have an independent financial system that is a reflection of the problems in the financial system we have today. It's a new movement, it's freedom, it's global, it's all this stuff. And I'm finding a less legally accountable way to be like a central bank and arb that movement. I'm basically monetizing the fact that there's a lot of people that are exiting the financial system, want something more fair and new, don't totally understand what the fuck is going on and what's the difference between Ethereum and Bitcoin. But it acts as a free market, but it's not. It has a founder. It makes business-like decisions. Why did it go from proof of work to proof of stake? Why did it fork and rewind transactions in the DAO hack? So I think something that has a founder, that has direction, that has outside influence, that has a roadmap, that makes politically driven decisions, there's no problem with that. But that's a company. That's more like Strike than it is Bitcoin. But I think they want to be thought of as a commodity and as a freer market, because they get, when Bitcoin goes up, Ethereum goes up, right? It's an index basket of this independent, different financial system. And that's the only real issue. And I mean, to be honest, like, I don't really give a shit about shitcoins, to be totally candid. Like, they don't, it is what it is. I'm much more free market. I don't advocate for Gensler to do anything, really. Money's that important. And we think we came across the best one ever, which should allow us to enter one of the most flourishing chapters of human history. And then you have someone who creates something in their basement that's intentionally conflating it with the general public to take advantage of a momentous opportunity for our species. And that's where it's like, yo, if you guys want to create technologies and print money and stuff, I'd find it incredibly unethical, but like, get out of my way. And that's like the issue I have with these things. And the one last point I'll say is that for the people that say, well, you know, if they weren't worth anything, then if they had no value, they'd be worth zero, right?
Really what I think I get at is like, are the other use cases in crypto going to be bigger than the gold use case, like the Bitcoin use case?
Gold is defective money. It's money that isn't good at being money, because we have dollars and pounds. If it was good at being money, it would remain money. So it's like a defunct, defective, not so great money that has a market cap of what, 12 trillion or whatever that number is. If you want to compare Bitcoin to money, what's the size of capital markets overall? So currency markets, markets valued in currency cash flows, real estate, gold, precious metals. I mean, that's like hundreds of trillions of dollars. That's where I think Bitcoin's on its way to. Comparing it to a defunct money that isn't that good at being money versus something that wants to be the king of money, I think is like a bad comparison. So I think Bitcoin has the biggest target audience. It has the biggest opportunity set by a long mile. The problem with saying something like Ethereum is like Facebook is valued based on its cash flow, based on its business assets. Ethereum's valued based on this thing that is supposedly supposed to be a commodity, but like changes all the time, right? Like how am I supposed to value it? I think Bitcoin isn't a technology in the sense that it isn't optimizing for cash flows. Like everyone can be sitting on their Bitcoin, holding it in their basement. It's a perfectly fine use for money. You don't have to spend your money. You can save your money, and hodling Bitcoin's fine.
Well, you can save your Bitcoin.
Right. But
you can't save your fiat.
Of course not. But if Ethereum is a technology and Bitcoin is money, and you want to have distributed technology, why do we need an actual monetary instrument in that system in the first place, right? If it isn't a money. My point is, if we wanted distributed, I don't know, what's your favorite DeFi use case? They're all fucking stupid. Distributed medical. Well, fine. Everyone runs their own medical node at home and will use Bitcoin as the money to talk between the distributed network, right? Why do I need... The problem with shitcoins is the first step they go, I changed the world. I created this new technology that advanced humanity. I go, really? Wow. What's the first step? Buy my shitcoin. I was like, wait, hold on. The moment that you create your own money, you know what Satoshi did? Created it, gave it away, walked away. You want to be like Bitcoin? Invent it, give it away, walk away. So you want to be like a shitcoin? Invent it, sell it, hoard it, and continue to change the rules that benefit you. So I think a Bitcoiner's position is, this is money, good money that I can put under the mattress, and it'll be worth more tomorrow than it is today, because it's hard. It cannot be debased. And all of our contributions to the economy and to the world are going to produce goods and services that actually decline in price against this hard asset. Well over half my money's gone with 2% inflation, which is gold, the gold standard, right? Why was that okay? It's because all of us humans were producing more growth than 2% every single year. So when something goes up 160%, the way I look at Bitcoin is, not only is it protecting me against the debasement of fiat, but it's allowing me to capture all of the innovation and amazing things that humans are creating. And so 7%, we're like innovating on AI, bro. 7%? You're not giving me any returns at all. 160% means I'm living in the year 2024. There are computers that are solving insane problems. I'm able to fly from Chicago to New York to hang out with you. And the fact that Central banks have never had a bigger problem. That's what 160% tells me. So I think that slowly but surely people will realize that. The last thing I'll say on this is that people aren't stupid, right? Is that you see another guy get 160% and you get 7, you're like, oh man, wasn't my year. But 15 years in a row, people aren't dumb. And, you know, if you do think of money as abstracted time and energy and not like, well, you know, I don't care about money. I'm altruistic. I'm going to donate it all anyway. Yeah, but think about it, time and energy. You know, the guy that owns the better money gets more time with their family, gets more housing, gets more space, gets more opportunity. And that's things that we all, I don't give a fuck how altruistic you are. That's life. That's human. That's family. That's relationships. That's love. That's hope, right? And so if I get more of that, because I own a better instrument than you know, get your S&P. I think it's just only a matter of time before the law of capitalism, the law of being human and logical is like, well, I should probably own that one.
In other news, Coinbase is suing the SEC. Let's take you back just a little bit. Recall that in October 2023, the SEC filed a lawsuit against Coinbase, alleging the exchange acted as an unregistered securities exchange, broker, and clearing agency for several cryptocurrencies they offered for trading. The SEC argued these digital assets constitute securities and should be subject to regulations. Coinbase argues that the SEC is stifling innovation by applying securities laws to crypto assets that don't necessarily fit the mold. Here's Brian Armstrong, the chairman of Coinbase. In this interview with Bloomberg in 2023, gave some perspective into the issue.
And the SEC have been kind of in this months, maybe years-long dispute here over defining a lot of the crypto environment, and they brought a certain amount of charges against you, to which your chief legal officer yesterday told me that you guys are willing to fight this pretty significantly. When you saw those charges brought against you, what is the first thing you did, and how far do you think you're going to have to go here?
Yeah, well, this was not unexpected. You know, we've been in discussion with the SEC for a long, long time. Even going back to before we were a public company, we started sharing with them how we operate our business, how we list assets on the platform, how we think about our staking program. And through a large number of dialogues back and forth, they allowed us to become a public company. You know, we had many discussions with them in the last year when their tone started to change, and they started to come to us with more questions about the business. So we were very forthcoming. We met with them probably 30 times over the last year. And we started to kind of ask them for feedback. And we said, you know, we would like there to be a robust market in the US to trade crypto securities. Of the 1,000+ assets we've reviewed today, we've rejected 90% of them. The ones we trade, we believe, are commodities. What feedback do you have for this, for us? How can we come in and register? How can we work together? And unfortunately, we were met with silence. We really got no feedback in those 30 meetings. The first meeting where they were scheduled to come and give us feedback, they canceled it a few days before that, and then we got a Wells notice a few days after that. So it's really unfortunate. We work with regulators all over the world, other regulators here in the US. I think I'm a reasonable person to get along with, but unfortunately the SEC under this chair has taken a regulation by enforcement approach instead of creating a clear rule book in the US that can allow this industry to be built in a safe and trusted way.
You know, when was the last time you personally met with Gary Gensler, and what did you say?
Right, so when he first came in as the chair, I flew out to New York. I reached out to him, our teams reached out. I tried to make an effort to connect with him in person because that's what I try to do whenever a new regulator kind of comes in. Unfortunately, we were not able to connect at that time. I'm not sure why we couldn't get on his calendar. And we followed up a few times in the year after that. We eventually got a meeting that was virtual. It may have been COVID related or something like that, but we were able to get a virtual meeting. But unfortunately, it was frankly like a pretty icy reception, I would say. We sort of came in hat in hand and said, "Hey, Chair Gensler, you've asked people to come in and register. Respectfully, we're here to register. What would you like us to do? What process would you like us to go through?" And his response was, "Talk to your lawyer. I'm not here to advise you." And that was kind of how the conversation started. And so, at that point, we realized there was a gap. We felt like this was an important technology that we felt needed to be built in a safe and trusted way here in the US, in a way that consumers were protected. And I don't know what his motivations or his personal views were, but it didn't seem like he was on the same page.
Coinbase argues the SEC has failed to provide clear regulatory guidelines for the crypto industry and is unfairly targeting them. They also filed separate Freedom of Information Act (FOIA) lawsuits against the SEC and the Federal Deposit Insurance Corporation (FDIC). Coinbase seeks internal documents related to past crypto industry investigations, suggesting they suspect a broader effort to limit crypto businesses. The SEC chair, Gary Gensler, has maintained that certain cryptocurrencies meet the definition of securities as outlined by existing law. They argue that investors in these assets deserve the same protections afforded to traditional securities, as clear rules are necessary to protect investors and prevent fraud in the developing crypto market. Here's Gary Gensler in 2023 in a CNBC interview.
I do think that working with Congress, and I think it's only Congress that could really address it, it'd be good to consider, if you would ask my thoughts, to consider whether to bring greater investor protection to the crypto exchanges. And I think if that were to be the case, because right now the exchanges trading in these crypto assets do not have a regulatory framework, either at the SEC or our sister agency, the Commodity Futures Trading Commission.
In April 2024, a judge ruled against Coinbase on most points of their initial motion to dismiss the SEC's lawsuit. The judge determined the SEC adequately alleged the tokens in question were securities, and that Coinbase's staking program could be considered an unregistered securities offering. But this time, Coinbase is suing the SEC to give up documents on closed probes involving Ether's status as a security, and its research contractor is now suing to get them. The final outcome will determine the path forward for cryptocurrency regulation in the US. That's a wrap for today's video, featuring Jack Mallers' insights on Bitcoin and the cryptocurrency market, as well as the Coinbase and SEC case. What are your thoughts on Jack's analysis of Bitcoin compared to other crypto assets like Ethereum and Solana? What do you think the future holds for these assets? Additionally, what impact do you believe the Coinbase and SEC case will have on crypto regulation in the US? Please share your comments and observations in the comment section below. Subscribe to our channel and give this video a thumbs up. Thanks for watching.